Bitcoin. Can we get an unrehearsed, unbiased view and figure out exactly what the heck is going on? Well, we're about to do that right now. What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And tonight is the late night Bitcoin update, and this will be, as I said, a completely unrehearsed, unbiased view of the 4-hour, 1-day, and 1-week chart. And I would like to send a shout out and thank you to Adam in the UK.
Yay!
Thank you for motivating me to finally get this update done. I've had a horrendously busy past several weeks and have not been providing the BTC action, but I'm going to get better about that and start bringing back the altcoin and Bitcoin technical analysis videos. So stay tuned and stay on me. All right, well, let's just jump straight into this chart with no further delay. But first, we must get rid of my handsome face. And here we are on the 4-hour chart. Now, let's just kind of zoom in here and see what we see. Price coming in at 39,445 off of this peak here. Let's scrunch this down a little bit. We had the peak up here around 48,000, and that was back on March the 28th, and we've been in this downtrend ever since. And so I've had a couple different ways that I've been looking at this, and you're going to see it on the 1-day chart. But on this chart, what sticks out, in my opinion, that just jumps right out at me is this. Okay, we see this downtrend going on, and we kind of have a channel that looks like this. And there's two different ways that we could look at it. This is way number one. And then we could also change this up a bit. Let's see here. And I'm also seeing the possibility of this happening. Now, when we rearrange these lines, we are noticing the formation of a little bit of a downward trending pennant with a triangle with a flat bottom, or slightly ascending baseline. And we could say that this action up and down is going to break out sometime in this area here before we get to the apex of this triangle. Now, we're really going to have to dig in deep to be able to tell what's going on, because we've got several conflicting clues. First of all, right off the bat, let's start in the middle. We had this fake out here where we had a crossover on the stochastic where it looked like we were going to cross over and jump bullish and start with an uptrend, and that unfurled and we went back down. Now we've got another crossover that looks like it's trying to happen right now, where the fast line and the slow line are touching. So do we come up from here? Well, that's what you would think, but there's some other indicators that are not saying the same thing. And first one is up above. Let's zoom in on this so you can see it. I don't want you to miss this. First off, we see the two green candles that produced this almost crossover. But what do we have right after that? We have this red candle. Let me get an arrow here. There's a red candle forming. And what really is drawing my attention is where that candle started to form. It looks like we fell through the bottom of this support and resistance zone that I have indicated on the chart. Here's the support resistance zone. This is historic action, right? Oops, dang it. Let me try that again. This is historic action. All right. This has been around for a long time, and we failed the bottom of it, and it got its act together, came back up into the zone. Rejection. Two different rejections that are significant. The first one is on the 200 EMA. That's where these candles really bounce down around this 200 EMA. And the second is where we wicked up to the top of this support resistance zone and came back down. That's weak. So then we bounced on the bottom after wicking through, okay, the point of control price there. And then we poked through here and failed it. So it looked like we were coming back up to get back in the zone, but now we got that red candle. Now, I'm going to clear this out and zoom in even further to show you why this is a little bit more concerning and could be more serious than just coincidence. Here we go. Notice this sloping line that is underneath this support resistance zone. Remember this line because we're going to talk about this when we go to the one-day chart. Here is this upward sloping line right there. And notice how this red candle wicked above it, but then boom, rejection. The body of the candle is falling below right at this ascending line. So let's remember that. And if this is an absolute rejection right here, I think we could be heading down to the next support resistance zone. If this turns out to be a fake crossover, then we are definitely going to come down here into this next box, into this area right there. The other indication on the 4-hour that doesn't look good is this bearish cross on the oscillators of the MACD and the divergence that is going on with those oscillators, where you see a big gap between this line, which is the fast line or the slow line, and this one, which is the fast line. Now, we do have the light red bars on the histogram, which says we are leveled off or maybe creeping back towards the zero line, but don't be fooled because sometimes this can unfurl and reverse and we can still go deeper. Now, with the momentum of these oscillators, it looks like it's got to do something like this before it recovers itself. So there's a chance that this downward movement is not done yet. Now, that's not a definite and it's not a guarantee because there are still two targets up here on this 4-hour chart where price could get snatched back up. The first is here at the point of control price, the biggest volume node on the VPVR. This is the volume profile visible range. It shows you how much volume happens at every price point instead of how much volume happens at every candle point. These are 4-hour candles. Every 4 hours, one completes, and then this is how much volume happened in that 4 hours. These are based on the price. So this means that at this bar, we had this much volume at the price point of 40,445. That's how many Bitcoins have been bought and sold at that price. Price tends to stick to these volume nodes or get attracted to them. So the next one up is at around 41.5 right here. So if we do recover and get back into the zone, I would look to come back to these nodes or even this top one where we could possibly come back to test the top of the support resistance zone where I'm thinking we could get rejected again. All right, let's jump out of the 4-hour and let's get into the 1 day. This one is a little bit more telling. Ooh-wee. First of all, let's just scrunch it in here so we can get some more action. And now you can see it. Do you see this parallel section that I have indicated here? Well, that is the ascending line that I told you to remember from the 4-hour chart. Here is the top of this parallel channel. Here is the bottom of this parallel channel. And all along the way, what do we notice? We notice that price has been bouncing up and down within this channel. All right? That's why I wanted you to keep your eyes on that. And the reason is, if we fail this channel, it could really be ugly. Now, let's zoom in on the tip of this thing, the tip of the iceberg here. And what do we see as we're zooming in? We see that we have that red candle forming below this ascending line. See this ascending line here? Okay? And what do we have? We have a red candle right here that is dropping below that line. Now, when you couple that with this ugly stochastic, where the blue line has fallen and crossed over the red line, the blue is the fast, the red is the slow, and they are very divergent, meaning they're moving away from each other. This says that the momentum is down. So we could be headed down into this zone below the shaded area, which is the oversold zone. Now downstairs, we look at this MACD that also looks ugly, where we were printing light red bars on the histogram, which indicates that we're moving back towards the zero line. And then what did it do? Now we're printing dark red, which means it's moving away from the zero line. So if we're falling away from this zero line, that's not a good thing. And we noticed that we were about to cross back over bullish. And what did the fast line do, the blue one? It ducked down again. Now we see that they're diverging. They're running parallel to each other instead of something like this where the blue line goes up and crosses over. We didn't get that crossover. So up above here, we see that we had this bearish crossover right there. That is a bearish cross, this point right here. And now we are still in this negative momentum and we could be going further south because we're starting to print these dark red bars on the histogram. So when you add up this plus this, it tells me that this candle here on the 1 day, the momentum is going downward. Now combine that with this weak volume happening right here. This is looking very weak. All right. Now, price target wise, where could it be going if it's headed in that direction? Well, here's a volume node sticking out right here, and the price of this volume node is 38,863. So we're already at 39. We failed 40. We failed the bottom of this zone here right at 40. So we could be headed for this volume node. And if we blast through that node, then we're going to test this historic support resistance zone here. It will either be we bounce off of this and come back up and get into this zone again, or we fail this one and head for the next zone down below in this area. And then there's a volume node down here that could be the short range target on the 1 day at 36,991. All right, let's clear this and scrunch this up so we can see these other zones here. All right, there we go. Get a little bit more history in the visible range. We see the point of control price, or the most commonly traded point on the chart, at 41,919 with momentum falling away. Now, when you have momentum that is falling away from the point of control, that's a bearish condition. So here this big node sticks out right above this support resistance zone, and then the next one is down here at 36,000. The next one is just above 32,000, and if we fail that, we're probably going to head into the 20s. Now, what's the chances of this happening? I don't know. I'd call this 50-50 or maybe 60-40 that we're at least going to correct down to that next volume node and look at 38. All right? So probability-wise, and this is not financial advice, our probability is at least heading to this. Less likely is going below it, for the short term, and less likely is jumping back up to this volume node above because of this bearish indicator and this bearish indicator. So that is what the 1 day chart is trying to tell us here. Okay, so let's scrunch this down and look at it a little bit more and see if we see any other clues. Some people are saying that they see a bear flag. When you scrunch it in like this, you do see a bear flag. Let's get this bear flag up here. Let me make this nice and thick so we could see it. All right, so this action would be the pole, and then here's the flag right here. Okay, you see it? Whenever you get that, it's the opposite of a bull flag. Like when you look back here, here's our little bull flag happening. And then we pop out of that, and then you get the measured move that is the same as what you had before, which brought us up to this point. Then you had another bull flag right there, and it gave us another measured move, the size of that flagpole. And this one you could also call a bull flag. It gave us another measured move, and then we started to downtrend after we hit that peak. Okay, so if this is a flag, then we could come down a long way, because this would be the measured move right there. It would be the distance that we have of the previous. So it would be, like as big as this flagpole here, as far as how far down that we could go. No guarantees on that. It's just what the chart is telling us right now. Don't go trading that, because you could get yourself wrecked. Anything else on this 1 day chart that needs to be mentioned? I don't know. I think that's pretty much it. One other thing I'll say on this chart is I notice how people miss trends. until it's glaringly obvious. Okay. In other words, for example, I'll tell you what, whenever we had all of this action right here, we're bullish, right? And then we were thinking that things are still going great and we had already hit the high point, but people don't know it. And they didn't know it until we got back down to this zone. They started to suspect it wasn't looking good. And then we knew it once we got here to the bottom. And then you look back and you had this trend right here was a bearish trend, bearish channel. But we didn't really know it until we almost got to the end of it right there. Because honestly speaking, same thing happens in reverse where people don't realize it when you're in a bearish trend. This is when everybody was saying we're going to 28,000. We're going to drop all the way to the bottom here. Then it pops up and we're already in the bullish trend, but nobody knows it. And they're still thinking it's going to go down at this point. And then we popped up and then we popped up again and boom, high point. So it wasn't until we hit this level right here that we realized we were in a bearish channel. And there's no way to tell because until you get to that point, you could really, this could flip. This could do something like that. So you don't have enough evidence to be able to tell. That's why hindsight is 20/20. That's why so many people get it wrong. When everybody comes out thinking that they got Bitcoin figured out, they can get it wrong. So right now, we're pretty much in a bearish trend, but we don't know if we've broken out of it yet. Evidence for the fact that we have broken out is this. We have a rising bottom and higher highs, okay? And until we get to this point right here, right now, we've had higher lows, and this is still a higher low, but we've broken the bottom of this channel. So that's the only evidence that we have not exited from a bearish trend and that this is a bear flag, okay? However, that's not for sure. There still is that chance that this is a bullish trend that will continue and do something like that, even though I don't think that's the case. All right, here's why I don't think that's the case. It's on the 1 week chart. This kind of does it for me. This is just, wow, this is fascinating here. Now we look at the stochastic and this gives us really a good clue as to trend reversals, all right? And it's where this trend reversal is occurring. Now, what sticks out like a sore thumb? Can you see it? Well, if you said stochastic crossover, you're right. That right there. Okay, I always tell you that you need to look and see what the returning price is for the stochastic positioning. So in other words, when we have a stochastic bottom, this is the price that is returned. Then we have a stochastic peak. This big peak returned this run. So then the next dip gave us this low point, and the next peak gave us a higher high. The next dip really wasn't a dip here, and the next peak brought us an even higher high. So that was an uptrend because on every one of these stochastic peaks, we got a higher high, all right? Now we jump down and we go low. So when we hit the bottom here was a dip, hit the next bottom here, lower low. And then on the next run up, we had a higher high, but not in accordance with the previous peak run. But on this one, we did break the all-time high right there. Okay, that's significant. So when we hit the next bottom of the stochastic cycle, this was positive. It's a higher high. I mean, look at that. This trend is still intact, just like that. All right. But now we got this big ugly crossover that happened right here. So here's the crossover. Is it going to hold or is it going to unfurl? Chances are it's probably going to continue in this direction. That's just my guess. I'm thinking this is going to hold because we're getting a divergence between the fast line and the slow line. Now it can flip and go the other way, just like it did here. See that flip? See how it flipped over and went back up for a double hump? But what's the difference between this point and this point? If you guessed trend, you guessed right. In this previous fake out, the overall trend was up. Now we have a crossover here and our current overall trend is down. All right. So with that overall downtrend, I'm thinking this crossover is going to stick. It's not going to be a head fake like what we got here. And the other reason why I don't think so is the diminishing returns that we're getting on the MACD histogram and oscillators. Look at this hump here. And then we got a smaller hump here and a tiny hump here. And now we're already in a negative bar. Look at the peak on the oscillators at the MACD here with this peak. Look where the peak was here with this peak. And now we're way down here with this peak underneath the zero line with a crossover about to happen. Because of that, I think we can have a pretty nasty correction. Who knows? We could come down here to the 200 EMA, the 200 exponential moving average line, which is on the rise. And by the time we get there, it could be at like 28, 29,000. That's a worst case scenario. And I think after that point, we're probably going to start the next trip up. And it could be a long journey. It could take several months before we get to this point that we start to move up again if we capitulate. And then once we start the next move up, it could be, you know, a run up with a correction, you know, like that. All right. And then we hit the new all-time high. Maybe that's when we go to 150,000 or 200,000, something like that. Now, the interesting thing is this. We all got fooled last year. It was May. All right, here we go, May of 2021. And then we got this point here, November of 2021. November of 2021 was the market cycle peak. Right there. And we were in denial thinking that this wasn't it yet. So the market peaked out above 60,000 and that was it. Some people thought this is the market cycle peak. They were wrong. But then some people said this was the market cycle peak and this was the bear market here. And this was the start of the next. And then this was the next market cycle peak, which I don't believe that because you don't have a market cycle in a few months after we've taken 4 years. It just doesn't happen that way. We can't depend on 4-year market cycles forever. That could change. But for right now, it looks like a much bigger picture is forming. And this whole piece of artwork is going to take a long time to play out. And where you chop it up and call it the 4-year, I don't know. Maybe it's from the year 2000 to 2023 or 4. Okay, from where we first started this big rise right here. Maybe this is the beginning and it's back in the year, what, September of 2000. So maybe 2000 to 2024 is going to be the complete cycle. So that's a different way of looking at it that not a lot of people say. Not a lot of people talk about that, but we'll have to see. So that's all I've got. Let me know if this made sense and if you learned something new and if it was easy to understand and if it gave you a different way of looking at this whole mess. And do you think we are going to dip down to 28,000 before we move up, or do you think it's up from here? I'd love to hear about it. Post your thoughts in the comments. That's all about that's all I've got to say about that. Rather, I'm going to study a few more charts, drink my coffee, and call it a night. Thanks for watching. This is Carlton, and I am out.